Welcome back to Driving Deals, the podcast where we talk about the trends, strategies, and realities shaping dealership ownership, profitability, and of course, buy-sell activity across the country. I'm Gerrick Wilkins. There's a big focus on front-end gross, inventory strategies, fixed operations, blue sky, deal structure, and rightly so. But one of the areas that often get underestimated, especially by dealer principals who are busy running everything else, is the true strategic value of F&I and how that ties into a potential deal. Yes, F&I, it's about product sales, it's about customer protections, it's about finance penetration, but at a higher level, it's also about process, training, profitability, cash flows, and long-term enterprise value. Today's guest is Andrew Clevenger, Vice President of Gulfstream Partners. Andrew works closely with dealers on the F&I side of the business, helping stores identify opportunities for improvement, strengthen their practices and programs, and think strategically about how these products and structures fit into the broader dealership landscape. Andrew, welcome. It's so nice to have you here with us on Driving Deals.
Yeah, Jarek, thanks for having me.
Well, Andrew, before we get into all the nuts and bolts of what we have going on, why don't you tell us a little bit about yourself and Gulfstream Partners?
Yeah, so Gulfstream Partners, we are a long-term strategic F&I firm. We are your one-stop shop for F&I, and this is through multiple iterations that we're able to achieve this. It is both through having the correct product portfolio within the system. It is maintaining standards throughout the F&I process. It's also participating program structure, innovative technologies, and does that mean to everybody? Whether you're single point, multi-group, it's maximizing profitability in the back end office.
Absolutely. And I appreciate you setting that up because we found that this conversation isn't just about service contracts and F&I anymore. It's really about how sophisticated dealers look at their entire back end process and how that ties in with reinsurance programs versus retro programs and all the different aspects of it, which really do impact the overall enterprise value. So with that in mind, let's get started and start talking through this process and how dealer owners or CFOs can really think about the profitability and what really impacts the F&I component and how it translates to the overall profitability of a dealership. So tell us a little bit about how F&I can be broadly looked at when you look at a full dealership operation. What are the key components that you think are important for us?
Well, there's a lot that goes into that. F&I is something that you have to think of when going into these acquisitions and how not only are the numbers broken down by individual performance, but it's actually showing, on your statement, on your financial statement. And where you kind of get caught in the weeds a little bit is how do you get there? So from looking at individual PVRs, if you're a multiple rooftop dealer, make sure you're looking at all of your rooftops individually. You also want to check what products are being sold. What's your penetration percentage, cancellation percentages, what's the reinsurance position, when was the last time you have checked your reserves and what your, claims are looking like from your participation standards. So all those things you definitely want to factor in when looking over an F&I office closely.
Yeah, in a potential acquisition, all of that matters, right? But one of the first questions a serious buyer often asks is, what is the store really earning? But also they start asking about where is their extra value? And we oftentimes see that one of the first places people can significantly improve operations is with the finance and insurance department. So tell us a little bit about the modern F&I service provider. What should a good partner actually be bringing to the table beyond just a menu of products?
Yeah, and I couldn't agree more with your previous statement. F&I is the smallest department in the dealership, and it's the highest grossing per capita in the dealership as well. So we want to make sure that there is a focus on that. Current F&I providers, whether you're direct with an admin or you're with an agency or a firm like ourselves, they're bringing in multiple things to the table. So number one is accountability, right? Are you driving that process? Have you set a standard, and are you working to achieve that standard within the organization? Number two is having the correct product lineup, the correct product suite. The products that you're selling, are you selling the correct products? Are those products right for the customer? And how are those being managed also in claims? We want to make sure that we're not reconditioning vehicles through service contract companies, things like that, which is another good point. But if you're a new dealer going in, what do you want to look at? You want to look at the current reinsurance position, right, and how it's performed.
Yeah. And I think that's important for dealers out there to realize that there's a lot more to the F&I department than what originally meets the eye, right? And they've got to really dive into that. And a sophisticated dealer will do that. They've got to stop looking at F&I as just a department and look at it. How does it integrate into our whole operation? So, because you provide help in improving training and accountability and processes and performance measurements and all of that, what else are you seeing as some of the biggest opportunities that dealers have when it comes to F&I?
Within F&I, you want everyone on the same page. F&I, you got to think about the sale in F&I and preparing the customer for that interaction with the finance manager well before they even get to the box. You want to start at the sales team. You want the sales managers to pitch it. You want them to know that these questions are coming, so you're not catching them off guard. The customer nowadays is more educated than ever. They have instant access at their fingertips, whether it's through their phone, iPads, whatever the case may be. And now we're actually seeing customers sitting in there in the office, recording the entire conversation with AI and asking AI what they think their thoughts and feelings are. So we know what
Well,
the objectives are, and that's something that we are preparing for.
well, I think that's important, and you touched on this also in your previous segment, talking a little bit about reinsurance and how that crossover and it impacts a buy sell. So when a buyer is evaluating a rooftop, and they're looking at the F&I department and they're looking at the process and they're looking at the penetrations and the product mix. Where do you see the biggest upside for them as they're evaluating a new opportunity?
Absolutely. I believe when you're participating, whether you're participating currently or thinking about participating, but those who have been doing so, what was best for you 5, 10 years ago may not be what's best for you now. Reviewing your reinsurance structure and, whether you're in rapid acquisition mode, depending on your situation, it's something that you definitely want to really take the time, sit back and focus on. It's something that you can lean on your provider for. Hey, how are we performing? Where's my loss ratio? Are our reserves set correctly, which I referred to.
Let's talk a little bit more about this reinsurance part because this is one of those topics that obviously gets misunderstood by a lot of people. You're in this on a day-to-day basis, and when we start evaluating deals, we always have an add back line reinsurance, and how does that play into it? But what are some of the things that are important for a dealer to look at when it relates to reinsurance and how that ties into their overall operation?
Yeah, it's also how you're going to bring that money in as well. Most reinsurance, it's you know off the books and essential, right? Where it's coming directly back to the dealer themselves. So it's a way for them to go ahead and grow that personal wealth through reinsurance. You want to make sure that not only is the reinsurance structure great, but it's also the products that you're selling. The products and the reserves and increase. You can get creative with products now where you have higher reserves that earns out a lot faster. That can really, really help with your loss ratio and your structures there. But with the current market and what we're seeing today, there are 10 different participating program structures out there. I mean, everybody has a hybrid version of one. Outside of your traditional CFC, NFC. We're seeing some of the older deals were orchestrated and structured there, but we're not seeing that so much today. But now you have hybrid, you have DOWCs, you have retros, you have hybrid retros and guaranteed retros. So there's just so much to kind of take in. But once again, that's where you want to lean on your provider and look at your current operation, your current participation, and make the best choice for you for the future and how you're going to continue to grow.
Well, it sounds like there is definitely a lot of crossover when we're evaluating a deal with our F&I providers. And it seems like as you're looking at these acquisitions or you're looking at a disposition, one of the conversations you do need to have is with that F&I provider. Because we first of all want to make sure when we're evaluating a deal that we're picking up all of the income. And in some cases, this is one of those that people forget about because it's not on the statement. It's coming through in being paid out over many years in some cases. So they've got to accurately provide for that. So they've got to have those conversations in play. And at the same time, though, when you're looking at a new acquisition, it may be that the previous owner didn't have the right mix on these products. They were doing a program where they were not maximizing the value. So it seems to me like just as much as when these dealers are talking with their accountants and their lawyers, they should also be having a conversation with their F&I providers as well.
I agree.
So this is a great segue as we continue this conversation. Let's talk about how we evaluate F&I in an acquisition. So as we start talking about evaluating F&I and how it relates to an acquisition, let's talk through some of the scenarios that a dealer principal or a CFO may look at and how they're better integrating their F&I component into evaluating this acquisition. So what are some areas that you see, hey, when you're looking at this acquisition, you need to really look at, you can improve this, or you can improve this, or you need to structure things differently to really add value and profitability on the deal.
Yeah, it's outside of PVR, which you already mentioned. Product diversity is very important. What products are we selling? Are we selling enough prepaid maintenance to bring those customers back in? Are we going to be able to retain that money from, a fixed ops perspective? So you want to look at the product diversity in which they're selling prior to your arrival, prior to your acquisition to see where an opportunity is there. So outside of PVR, are we selling the right products? Do we have the correct product, diversity within the organization? You know, One thing that we always mention is when you're acquiring a new store or a new group, it's the perfect time to hit the reset button on the computer, right? Reset your structure, reset your goals, and that's something that we'll fight towards. If your PVR is currently underperforming, $1,400, 1860 is currently the national average, 1.62 products per deal, and well over 50% VSC pin. If you're not meeting those standards and you are previously going in, you obviously know you're going to pick that up, but it's a good chance to reset. Finance from a product perspective is going to sell from cost up anyways. So that's another way that we can drive. Can you scoop additional pack? If you go with a new product provider and their admin's a little bit cheaper, if your reserve's a little bit cheaper, scoop that, bring that to the house, and that's another income source for you.
Yeah, and it's great that you talk about packs because a lot of dealers have different amounts set up on that. And that's one of the things that we like to look at when we're trying to normalize earnings is what is the pack money? Because sometimes it may be going to different family members or it may be going back to a management company, but it's not on the income statement. So that's one of those questions when you're evaluating a deal, you do need to ask, is there an F&I pack? And where is that money going? And how do we quantify that and verify it, right? Because everyone says, "Oh yeah, I've got a pack," but we need to also make sure that all the numbers really tie in and are real. So a strong one can make a case that there's considerable upside when it comes to F&I. Now, we also see though that F&I is more than just profitability. And you've alluded to some of this when you've talked about structure with reinsurance, or you've talked about the hybrid plans and all of this. And a lot of times it just really gets to confuse dealers because they don't understand how this ties in. But that's why having experts in this field helps. But let's talk about some of the other nuances and other ways that your F&I provider can really help drive value on an acquisition.
Typically with acquisitions, we deal with them all the time, right? We Whether it's a single point, whether it's a multi-point store, and what we want to make sure is that when you're looking at an acquisition of the new store, that F&I is on the forefront. You want to make sure that that is being viewed heavily as a profit driving center within the organization. So outside of reinsurance structure, outside of increasing PVR, outside of having the correct product lineup, it's what kind of training is being done. Your F&I providers typically can train sales team, F&I staff as well to get everybody speaking the same language so the process is fluid throughout. What we want is accountability and consistency in process. Once you have those three items really kind of merged together, that's when you really start having a well-generated F&I department that is generating income, that succeeds what it was doing previous.
So now, Andrew, we've been talking a lot about how we can improve operations, how we can help with train and process and product mix and PVR and all of these other things. However, we also know that our F&I providers can be another great resource on an acquisition, and that is with alternative capital. So tell us a little bit about how you guys have been able to help some of your clients really come to the table and get a deal done that they couldn't otherwise do because of some alternative finance or capital ways you can do business.
Yeah, so we will to do a deep dive into it. Advances are an important part of what we do, and that is looking at the current performance of the store, is looking at how that's being measured through product sales, through PVR, what products are being sold once again. And also it can be related to what you're doing previously. So if you're buying an additional rooftop, how does your current stores or group perform? And that's something that we can measure against. So in the right situation, we can advance money brought back in through pack essentially to allow you, that operating expense, that operating capital that you need to get the stores going. We've had customers put it down towards blue sky, towards real estate, but it's another source of income that you can bring in. That once again, it's kind of off the books. That will allow you to, fulfill and see that acquisition through.
So for our dealers and CFOs that are listening, I want to take this a step further because a lot of people don't realize that, hey, our F&I providers can provide an amazing alternative source of capital to get a deal closed. And we've seen that when they're having to stretch. And we've had in recent episodes, we've had lenders on who have talked about what their capital requirements are and how they're normally are doing 50% blue sky or 80 or 90% on real estate. But where this comes into play is when you're trying to bridge that capital that you need to close, you can rely on your F&I provider to be another source of capital for you. And the great thing is that's all based on relationship and your portfolio, not just from the acquisition you're buying, but in some cases from your other book of business across your dealership platform, right?
That's correct.
And we're seeing that this is an excellent way to help manage that because the other advantages, depending on the manufacturers, and obviously we know they all have different requirements when it comes to their working capital and how you structure a deal. But in many cases, you're able to use this alternative capital from your F&I provider as a way to bridge that deal and get a deal done that you may not otherwise think you can get done because we know how capital intensive these deals are. When you start talking about cash you need for blue sky and fixed assets and parts, and then you need working capital money, and then you've got to have the real estate down payment, all of these things. We see dealers that are very well off, but they may not have as much liquid cash, and this is where your F&I provider can help bridge that gap. So that's great to talk through some of that, Andrew. I appreciate you letting us know that there are options there. But we also know that when people do these evaluations and they start looking at their structure, we also see that sometimes they make mistakes when it comes to their F&I strategy. They make assumptions that aren't real, or they overestimate in some areas. Tell us some of the things that you see are mistakes that are made in F&I, whether it's on a departmental level or overall in a group strategy that they're looking at.
Sure. Every dealer is different. We work with dealers that, whether they participate or not, and dealers that pack and whether they pack or not. But the one thing that we see is dealers who put F&I on the forefront, who don't see it as the final step in the sales process and see it as a blend of the entire sales process all the way through, those are the ones that exceed. And those are the ones that push those boundaries. Those are the ones that you go to the 20 group meetings and they're saying, okay, how do I get to those numbers? It's because it's not an afterthought. It's the whole process throughout, and it's changing that mindset. And that's something, once again, hitting the reset button where you change the mindset and having it start from point A to point B. It's filling in everything in there. And it's done once again through structure, accountability, and training. That's the only way to get
Yeah. That is very good. I appreciate you taking that. Let's take this another step farther. Let's make it practical. If you have a dealer principal, a CFO, a top level executive in a dealer group, and they say, I know we should be sharper here. What are three things that you think that they could do this quarter to improve their overall operations when it comes to F&I?
Yeah. First thing is do a deep dive into the numbers. And not off the statement, right? It's a deep dive into individual performance, into rooftop performance. If you're a large group, you need to make sure that you know where the numbers are coming from. Do you have an F&I department that's fluid throughout, or do you have an F&I department that has one hammer and two okay people, right? So at the end of that acquisition, for instance, you're going to acquire the store. Is that finance manager even going to stay? So that's also something you want to kind of bring into the picture as well when evaluating this process. But dive into the numbers, look at PVR, look at product penetrations, and just keeping it, whether you do it daily or weekly, just keep it in the forefront of your mind to see exactly where you're at and where you have to go. Number two is reinsurance structure. Look at your current reinsurance structure. Are your reserves set up properly? How's your loss ratio looking? your partner and provider should be helping you oversee this and manage this company and manage this operation. Outside of just increasing your PVR and profitability, product penetration, retention, and F&I, we also are there to create, personal wealth within the reinsurance company. And another way, you can borrow against unearned premium in some reinsurance companies to provide towards acquisitions as well, which I know I'm getting off topic. But yeah, one, dive into the numbers. Two, look into your reinsurance position. And three is lean on your partners. They're very comfortable with this. They're familiar in this process. They are aware of how all of it works, and they can kind of set you in the right direction as to, what you need to do. But numbers, take a look at your reinsurance, and then lean on your providers, right? Is the training being provided? Most people, when they go in, they give you a pitch. Yes, we'll be there every 2 to 3 weeks. You see them maybe once a quarter. Lean on them and make sure that's happening. When training is a forefront and you have support from the top, measurable results, will always follow. But it has to be something that's on the front of
Man, that's a great checklist you've got for our dealers today. And I think this has been a really good discussion we've had. So as we go through for our listeners, let's talk about a couple of key takeaways. First of all, F&I is not just about product income. It's an operational discipline. It's a source of hidden value. And in some cases, it can influence the broader capital strategy that you have in a deal. So when you're evaluating a dealership, whether you're a dealer principal, a CFO, all that you're really focused on needs to be more than just what you see on the financial statement. We need to look deeper into the operations and where the finance comes into play. Andrew, thanks again for joining us. It's been great to have you on here with us today.
Yeah, Gerrick, thanks for having us.
So, as we're wrapping up, though, I do want to ask you, though, is to let our listeners know a little bit more about how they can get in touch with you and Gulfstream, and how else that they can connect and further work with you guys.
Yeah, please. Name of our company, once again, is Gulfstream Partners. You can go to www.profitsfordealerships.com. Send in a note. We'll contact you immediately. We've been in the business for 18 years. We work with, like I said, single point, multi-point groups. And acquisitions is probably our favorite part of the process because it allows us to go in, do a deep dive with the dealer, bring things up, as we've been speaking about throughout this show today, that isn't necessarily recognized, and deliver. We through F&I is a constantly changing and evolving process. And if you're not staying on top of it, you're going to get left behind. With the integration of AI that we're seeing today, once again, with all the new participation programs, it's something that's worth your time to dive into to make sure that you know exactly what's going on that side of the business.
Excellent. Thanks again, guys. And remember, Driving Deals with Omega Advisors, our monthly podcast. Listen to us again. Feel free to visit us online, and feel free to reach out anytime we can help you, whether you're looking at buying or selling a dealership. Omega Advisors wants to be the last call you ever have to make.